bag. The who? This is accounting is a joke where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough problem of how to properly record uncollectibles under the allowance method. So if you're unfamiliar to the allowance method, don't fret gang, I dropped a link to get you up to speed in no time. So with that being said, let's get it. So it tells us that the accounts receivable balance and allowance for bad debt for a signature lamp company at December 31st, 2023 was $10,800 and $2,000 respectively. During 2024, Signature Lamp Company completed the following transactions. So we got a bunch of transactions and then they want us to journalize them. Okay, gang. So we're dealing with the accounts receivable, and we know when we deal with accounts receivables, one of the bad things that can occur is that the people don't pay you your money.
Come on now, dog. Come on, man.
And when the people don't pay your money, that's considered uncollectible. And so there's two ways we could account for uncollectible: the allowance method and the direct write-off method. This particular problem focuses on the allowance method. And under the allowance method, we estimate up front an amount that we expect not to collect from our customers based on previous experience. Now, that particular estimate could be calculated based on percentage of sales or percentage of receivables. When we estimate, we recognize the expense immediately. And then the fun starts. We try to collect, and eventually we don't. And if we don't collect properly, we'll make the write-off. So the allowance method is preferable because it properly recognizes the expenses in the period that the revenues were earned. So it tells us that sales revenue on account was $273,400, and they want us to ignore recording cost of goods sold. So, easy breezy gang, we're going to debit accounts receivable and credit sales revenue for the amount. We're going to check the answer. Good job, gang. Next, they want us to record our collections on the account. This is basic financial accounting, gang. We're going to debit cash and credit accounts receivable for the $223,000. We're going to check the answer. Nice work, gang. Next, we're going to record the write-off for uncollectibles for $5,900. Now, whenever we're utilizing the allowance method, gang, anytime you write off the account, you're going to remove two things off the books. One, the actual account receivable portion of the uncollectible amount, and two, that allowance for uncollectible account that was created initially during the estimate. Remember, allowance for uncollectible account is created with the estimate journal entry based upon the amount that you expect not to collect from your customers. You must also remember that allowance for uncollectible account is a contra account to accounts receivable, which means that it's going to be reported on the balance sheet by subtracting it from the accounts receivable to calculate the net realizable value. Your net realizable value is basically the amount that you expect to really collect on your receivables. So with that being said, the proper journal entry for a write-off is going to be a debit to allowance for bad debt because we're trying to remove it off the books, as well as a credit to accounts receivable because we are no longer having these portions of the accounts affected in the journal. We're going to check the answer. Excellent job. And last but not least, gang, we're going to record the bad debt expense of $5,200. Whenever we're recording a bad debt expense under the allowance method, we are truly making the estimated amount of accounts receivable that we expect not to collect, which means that we're going to debit bad debt expense as well as create or put the allowance for uncollectible accounts, or i.e. allowance for bad debt, on the books as well. So we're going to make the proper journal entry by debiting bad debt expense and crediting allowance for bad debts for the $5,200. And we're going to check our answer. Excellent job, gang. So there you have it. A quick introductory problem that sets the tone of how to account for uncollectibles under the allowance method. Now in the future videos, we are going to investigate how to properly make those estimates under percentage of sales or percentage of receivables. But as for now, gang, do me a favor and smash that like button, subscribe to the channel, and share this information with your friends so they can chase the bag as well. As always, gang, I'm Dr. Who, and I love the time and energy that you guys share with me, and I'll see you soon. Bags!